What is going on, traders? Welcome back to the Traveling Trader. In this video, I'm going to be discussing CCIV once again. As you know, we made a video on CCIV back when it was $17. I was saying why I think it could double. This is well before the merger with Lucid was quite known, but it was still within a manageable price for us to take a shot on, right? And as I always say, buying and waiting is much better than waiting to buy, because a lot of folks waited, and then CCIV shot to the $50 mark, and now you have a lot of FOMO buyers coming in. And what happened after hours today? Well, the merger was finally announced. Now, this came as a surprise to absolutely nobody, unless you were hiding under a rock. There were so many news stories on major sites like Seeking Alpha talking about how a deal is expected as early as this week. And it is because of this, in my last CCIV video, I said that the news is likely priced in. There is a notion within trading called buy the rumor, sell the news. Now, what does this mean in practicality? I mean, it sounds like some gangster shit to say, but what does this mean in practicality? It means that if everybody thinks that a certain event is going to happen, they're going to trade like it, right? So CCIV pushed all the way to the $60 mark. Why did it do that? Because people were expecting the merger. Most people were expecting the merger. And those that still held out, waiting for that solid confirmation, those folks, those traders are on the fringes. And those are the people that end up buying late. And the ones who bought in early get to dump their shares on those FOMO buyers. Now, CCIV tanked to $40 after market, which is why last week, this exact scenario is something that I was scared of, which is why last week we trimmed our position, we sold calls against our position, we even sold cash covered puts against our position, and took out our initial investment out. And now we are playing with house money. We are letting it ride, so to speak, in Vegas talk. However, if you are not in CCIV, this is rather good news. And I will go into the details of the CCIV Lucid merger and what you could do from here, how you can still trade this using a combination of options. I will go over the shares and what I would do if you're not trading options, but you definitely want to stick around to the end where I will give you all of my trades. And if you want all of my trades, not just the CCIV Lucid ones, link is in the description below. Obviously, the market has been going through a bit of a pullback, which was expected at some point, but nobody knows when. The market is due for a correction, and there are a lot of lucrative plays to get in when the market is red. And that is exactly when you want to jump in on some of these blue chips. How many people were waiting for Tesla to hit $700 or for Apple to hit the 100-day moving average? Well, we are there, folks. Are you going to buy? It takes a lot of fortitude to buy something that is declining in value, but buying the dips on blue chips is the best way to make money in the market. In my opinion, it is the best value you will ever get. Do you really think that Apple's worth 20% less as a company, or Tesla's worth 20% less as a company? Or is this just an overreaction due to the stocks running hot for months upon months? Anyway, if you want access to all of my trades, link is in the description below. Let us get back to the topic at hand. CCIV/Lucid. What were the terms of the deal, and how would I trade it going forward? But before I get into it, if you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know how you are trading CCIV, whether you agree or disagree with my assessment. Subscribe to the channel if you already haven't done so. I don't know what the hell you are doing, and let's get right into it. All right, so why did CCIV drop after hours? Well, two reasons. One, we already talked about, the sell the news event. Again, when the bulk of traders are expecting an event to happen and it already happened, then there are no further catalysts in the short term. It doesn't mean all is doomed for the long term, but those who got in early are dropping their shares on the FOMO buyers who are happy to buy it at 60, but the ones who bought at 15 or 20 bucks are happy to dump it at 60. So you have quite a bit of profit taking. The second reason is because of this, and I think people are really overlooking this. I haven't heard much talk about this, but in addition to the shares of the SPAC, there is $4.4 billion in a PIPE investment, private investment on public equity. That's what PIPE stands for. This is just a fancy term for saying that the company raised additional cash for Lucid. And that additional investment is what is priced at $15 a share versus the $10 a share that the default SPAC price was at. Now, this really, again, I mean, it might sound complex that, hey, okay, they valued it at $12 billion, but there's an additional $4.4 billion. All you need to know is this acts like a traditional offering. We talk about this all the time. When stocks do an offering, they issue more shares, and they do so in order to raise cash. Well, because of the popularity of CCIV and Lucid and the fact that so many investors have now pumped the stock price of CCIV to $60, they said, hey, we'll go ahead and raise some more cash. So they raised an additional $4.4 billion in cash. That will have a dilution effect, right? A diluting effect on the current shares. The same way that when NNDM or Bingo, when they do a share offering, the same thing happened here. So after hours, the profit taking plus the fact that there is a diluting effect due to an offering, essentially, the price tanked. Now, as I said, if you were part of the private trading group, you know that we are now playing with house money. We took out our initial investment, and now we are just taking a seat on the bus or the rocket ship, however you want to look at it, and we're letting it ride. So is there still an opportunity for you here to make money? Yes, of course there is. Especially if you know how to trade options, there's always an opportunity to make money. Now that the price tanked, one of the easiest things you could do is sell cash secured puts. I did a zillion billion videos on it. I will link it. I don't know if it pops up above this finger or this finger, but I will link it somewhere above. But essentially, you can come down here and pick an expiration date, either May or July. You want to go far enough to where you get a lot of premium for your money. Now, check this out. Today, this doesn't factor in the drop. If we sold the 35 put on CCIV, we would get almost $800 for it. Now, this is going to be a lot more money tomorrow because the price already dropped. So instead of these options are priced assuming that the price of CCIV is $57, which is what it closed at. But after hours, we went to $40. So you'll essentially be getting a lot more money for the $35 put or even the $30 put, right? But essentially you sell it. Let's just say that for the $35 put, we can now get $1,000. What that means is if you sold the $35 put, if CCIV never hits $35, right? Or you never get assigned because it can hit $35 and you're still far away from expiration because it expires in July, let's just say, and you don't get assigned, then you get to keep the $1,000 that you sold this put for. Now, if you do get assigned, you are forced to buy 100 shares of CCIV at $35. But remember, we sold it for the projected amount of $10 per share or $1,000. That means that our cost basis on CCIV will actually be $25. And if $35 is too close for comfort, you can sell the $30 put, which would even give you more of a cushion. Obviously, you will be retaining less of the premium or getting less premium for selling that $30 put. Now, I personally do think that we will see CCIV higher than $40 for a number of reasons. One, like I said, the dilution effect of an offering is temporary. So I don't expect that additional $4.4 billion that they raised, which is essentially a third of the value of the SPAC, I don't think that is going to have lasting effects. Two, Robinhooders can't trade after hours. Well, they can only trade, I think, for an hour of the after hours market, but this tanked 2 to 3 hours into after hours. So Robinhooders did not get a chance to buy CCIV at $40. So I think that tomorrow when we wake up, which is the next, I don't know when you're watching this, but it would be the following market day after the CCIV Lucid merger is announced, that Robinhooders will be able to get their hands on cheap CCIV and drive the price up. If you take a look at the chart, you'll see also that $40 is around the 21 EMA, which on my chart is the white line. You see it here. This is around the $40 range, and CCIV and the 21 EMA is right around 38 and change, almost $39. So that also represents a major moving average. Now, if we take a look at, say, like the 1 hour chart, I bet you will fall in line with, so on the 1 hour, the $40 mark is around the 200 moving average on the 1 hour. So In both cases, depending on which time frame you're looking at, but in both cases, these are major support levels. Now, besides the cash secured put, how else would I trade this? Well, here's what else you can do. You can buy CCIV at 40 bucks when the market opens, right? And you can also sell a covered call on CCIV to lower your cost basis. So this is completely separate from a cash secured put, which you don't need to own the shares of. In this case, you are selling a covered call, which you do need to own the shares when you're doing this. So you could buy 100 shares of CCIV at 40 bucks, and you could sell the $50 call expiring in July. You could sell it for $2,000. If CCIV doesn't hit 50 bucks, you keep that 2,000 bucks, no questions asked. If CCIV does hit that $50, then you'll be forced to sell your shares, but you bought them at 40. So you'll be making $10 a share, which is times 100 shares is 1,000 bucks. Plus you'll be keeping that $2,000 from selling that call, a win-win situation. Now, if you just wanted to play the shares outright, you can obviously buy CCIV at $40. I personally would set a stop limit, maybe in the $35 range, just in case CCIV starts dipping more. There is no rule that says it cannot dip more. Yes, I do think we will eventually be above 40 bucks. Doesn't mean that it'll be above 40 bucks immediately. Will it take 2 days for the effects of the offering to dissipate? Who knows? I'm not Nostradamus. I'm just a monkey with the keyboard. One other strategy you could do with options that doesn't require a large amount of capital, because I know a lot of you are going to say, hey, I don't have the budget in my portfolio to blow on 100 shares of CCIV, either in the cash secured put scenario, because you do have to have the collateral to buy 100 shares, or the covered call scenario where you actually do have to buy 100 shares. You can sell a credit put spread, a vertical put spread, right? And what this means, and by the way, I have an options course coming out, right? So the link will be the first link in the, or will be in the first comment, the pinned comment below. Sign up if you want early bird access to that. Anybody who's on that list, I'm giving you a huge discount on the course. So you definitely want to be on that list. All right, so selling a vertical spread, let's just go out to March 19th because CCIV only has monthly options and this is the next available one. Remember, all these puts are going to be worth a lot more when the market opens because the price tanked to $40. So what you can do is you can potentially sell the 30-25 put on CCIV, and per contract, this would only require $500 of collateral as opposed to $4,000 in the cash secured put or the covered call scenario, right? So in this case, you would sell the higher strike, the 30 strike, buy the 25 put, and you could do this today for 100 bucks. But like I said, tomorrow you will get a lot more credit for this because the price already tanked. Now, all that needs to happen is by March 19th, CCIV needs to finish above 30 bucks. And if it does so, then you keep that entire amount. If CCIV finishes below 25 bucks on March 19th, which I don't suspect it will, unless the deal doesn't go through or something. But if it expires below 25 bucks, then you will gain max loss. So let's just say that you sold the spread for $250. It's a $5 spread. That means that your max loss is $250 and your max gain is $250. So you will retain max loss. You can always go to optionsprofitcalculator.com if you want to check what your max loss and max profit will be. Anyway, traders, that is it for this video. I do thank you for watching. If you got anything out of this, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know how you're trading CCIV. Did I open up your eyes to a few more opportunities using options? Sign up if you want access to my trading group. Link is in the description below. We have over 4,600 traders now. I thank each and every one of you. The most robust, fun, active group I've ever seen. If you want early bird access to the options course, first link in the pinned comments, not the description, the pinned comments. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.